Hello and welcome to the Stock Planner channel. Tonight I want to talk about retail, and particularly a grocery store that I think is going to be here for the next decade. That grocery store is Kroger. It's a shopping store that my wife likes to shop, particularly the vegetables where they're fresh. But before we get started, I'd like to remind you that this is a education channel and we discuss stocks. I try to show you what I'm thinking about trading. It's not a trade recommendation. Do your own due diligence. Learn it. Learn the techniques. Come up with your own strategy and win. That's the way you do it. Primarily, I'm a swing trader. Looking at TradingView. By the way, it's a free charting package everybody can use. You can get up to 3 indicators. And looking at the zigzag indicator, which does look to the future, so it's not, you can't use this to trade, but you can use it for visual. And you can see that Kroger, this is a really big peak there. I'm not sure exactly what happened, but you can see that Kroger does swing rather nicely. It has some major swings, and then you can try to catch the minor swings. And that's what I'm thinking about doing today, catching a minor swing. You can see that the last time it traded, which was Friday, the end of July, and we had a run up, and then it came back down. This is on the daily time frame. It closed out around this open, but down from this open. We have a nice swing up, and then something might be changing. I use the MACD to help me with these swings. The stochastic RSI and the RSI. Stretching out a bit. When the RSI goes below the 30, that is a signal the time to buy, and we like it to come around right about here. And we hope that the other indicators have a crossover or are below the zero at the same time, and this happens to be. And then I like to draw a line there to kind of catch it and see that my indicator's working. And we move it over one. You waited for confirmation, and you caught a nice run up. This is a green bar. Set the green. Over here, we have the RSI above the 70 and come back around here. And we have that same crossover on my stochastic RSI. So let's draw a line there. Did we catch enough downward movement? I don't know. Again, the RSI is above the 30, and it's about to come around. The stochastic RSI is not telling us anything, and neither is the MACD. It's kind of flat, but it is above the zero. So is this going to go up or go down? What I like to do now is draw the Fibonacci, and I can draw the Fibonacci from here to there, but this has been a long trend, and all these little minor trends. I'm going to do something different. I usually like to draw from the last print, what I call that a print from the zigzag, but I'm going to use a minor zigzag. That's the major and minor. And by the way, I have my settings, chart settings, listed below, and how to set this up if you like my configuration. So drawing the fib from here to here, we get this. And I use this as my roadmap to where things might go. Let me just scan out a little bit more and bring this back in. Now we have to ask ourselves, it was already here. Is it going back up there on Monday or Tuesday or Wednesday? Or is it coming back down to the 50% retracement? Because when you have a run and you have a regime change, oftentimes it comes back to the 50% retracement and then continues on in the same direction it was in. Coming here at 39 or 40 or 42. 40 or 42. Let's take a quick look at Kroger, its fundamentals. Now, a swing trader is primarily a technical trader. It looks at the chart and plots lines and Bollinger Bands and channels and probabilities using indicators. But I believe that in order to trade successfully, you need to look at what you're trading. In this case, I think there's going to be a 10-day swing down, but all the fundamentals are showing this as a really, 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 really good stock. Let's see. If you ask me what I'd like to invest in the retail sector, I would tell you Aldi. Aldi, and the next would be Publix. But Aldi is not traded on the stock market. So a retail company that's similar to that is Dollar General, where they have small stores located out throughout the United States. Dollar General, it seems to be on a building spree. Aldi seems to be on a building spree. Those two companies have similar businesses. Now, one is generally better run, and that's Aldi, and But Dollar General is on the stock market, and it's one you can invest in. But lacking, not being able to invest in Aldi, I like Costco, which I'm going to talk about in the next couple days, Walgreens, but today we're talking about Kroger. And you see the top two. But today I'd like to talk about Kroger. And Kroger is one that I think is a stock that's going to be for the next 10 years. Definitely. People like it. Fresh vegetables. They're well stocked. They're clean. And it's pleasant to go to them. Looking at FinBiz, we see that Kroger is in a channel up. It's at the top of the channel. That would typically say, hey, if it's going to have a turn, it'll come back down below the channel. Every time it did that, up, down, up. If you believe that channel, it's just lines. Anybody can draw lines. This stock is definitely going up. Let's see what FinBiz has target price. Target price is $38. Now I'm surprised on that. I didn't prep on this. It's trading at 40, and then target price is 38. So it's got a ways to come down. Ooh, I didn't expect that. It's profitable. It's shortable and optional. It does not have a buy rating. It's got a hold rating. The last downgrade was in May. Let's see what TipRanks has to say about this. Same $38. 17 analysts covering it, expecting a drop. Well, I didn't expect that. I like this, though. I expected that. A 9 rating. Some insider selling. Look at that chart. Wow. It's at the top of this game today. The next earning date is in September. Note this. September 15th. September 15th. That's going to play into our strategy here. September 15th. Looking at Simply Wall Street. And you can do 5 of these stocks a month free. And in a paid version, you get 30 or 40. This is a snowflake, and you're trying to find a snowflake with a lot of green in it. This is not so much green, so it's paling. But generally, it pays good dividends. The health of the company is good. In the past, it's been pretty good. It's trading at 44% below fair value or fair market, and expected to grow about 11% each year. And the dividend is not that much. It's a lot of people that dividend bets look for 3 and 4%, but it's a steady dividend. High level of debt. That's because they're on a building spree, and some insider selling again over the last 3 months. Here's the current price. This is what Simply Wall Street says it should be worth, $73. And the object there is that people discover this, and that stock price will come up to that. So Simply Wall Street was more optimistic than TipRanks and FinBiz. Hey, these are just analysts. Believe what you want to believe. Earning growth, not that it's hot, going up, but not fast. There's the company. There's the industry. It's going to beat the industry. And it does not beat the overall market, though. Short term, this company's in good health. And they have their assets exceed their liabilities. But possibly not while they're on their building spree. Well, FinBiz and TipRanks has it coming down to 38. I think it's going to come down to the 50% retracement. In other words, you have a run, and here's your 50% retracement. It runs up, and I think it'll come back down. This started out to be a good day, and then up a bad day. I don't know what it's going to be like opening on Monday. It's been the weekend. Simply Wall Street has this thing going up eventually, and I believe that. I believe this stock is for the future. What I'd like to do is have a short-term, low-cost, low-risk deal or play, or gamble if you want to call it that, to take care of what I think is going to happen over the next 2 weeks. And I think it's going to happen to the stock market too. There's going to be some turbulence for this price to come down to at least a 50. So if I can figure out some way for this to stay below, that I would win if it stays below this number, anywhere below it, I don't know where, that I'd win, and I need to do this before the earnings date, which is September 15th. Let's see if I can find a strategy like that goes short, that the price will stay below what it is today. Looking at a tool, it's a free tool called Option Strat. I can look at various different option strategies, and you can get lots of information on this on the internet with better teachers than I could possibly teach. But I'm going to go for a bear call spread, which is a short position. The two that I use a lot are bear call spread or bull put spread. These are credit spreads and allows me to go short or long. And so I want to do this trade before the 15th, and that makes it September 10th, which gives me about a month and 2 weeks. It's currently trading at 40. And so I can set this below. A lot of times I like to set it below if I really am convinced that it's going to drop, which this time I'm not so, I don't know, because it went up, it tried to go up yesterday, the last time it traded. So I'm not convinced of anything. I just have this feeling that it's going to go down based on my indicators and based on Fibonacci. So I'm not convinced of anything. So I do 41, and if you can set these up higher, take less premium, but there's not a lot going here, and I set it at $2 between the gap. That's my risk, the width. There's my maximum loss, and that's what I have to put up for margin. But if I subtract the credit that I get, which is $67 from 200, I get this. So the best I can do here is win $67 if I hold it for the full approximately 40 days or 45 days. But I'm not convinced of anything, and I'd like to hold it for about 10 days. And what I do when I hold for 10 days, I try to get half of this. So I'm risking $133 to make around $35. 10 days, let's say 15 days, mid-August. 10, 15 days, mid-August. And if it drops from its current price of around 40 or 41, and it drops to $39.60, I'll get $33, which is about half of the net credit. Or of course, it could go the other way, and you're going to lose that much. If the trade is not going the way I suspect, after 10, 15 days, I can always get out $39.30 for around $30, $35. $39.30. Stay below $41.67. $41.67. I want the price to stay below that. $41.67 is my break even. I want to stay below that to the 10th. $39.30. $39.30. If it comes down to here, a little below the 50, or around the 50, I can sell this for around $30 after about 15 days. So I need it to drop. Will it drop from here to here? Is it possible to come down? Is it possible and hang around down here somewhere? Very possible, I think. And $35 profit divided by my max loss of $133 is about 26%. $35 doesn't sound like much. Not when you compare it to the winnings of AMC and Wall Street Bet programmers and traders. They're winning big time. Even though I don't believe that, I believe slow and steady is much better. We're swing traders trying to capture swings. This is a possible swing. You may disagree, and that's good. Do your own due diligence. I think it's going to come down to the 50% and then continue on. This is stock that I'm buying. I'd love to have it, but for the short term, in other words, I'm trying to make some pennies here. This is a long-term play for the next decade. People like this business. I also like Aldi. What do you think? Is it enough money for you? Let me know in the comments below. Again, this is not advice. Do your own due diligence. Let me know where you're trading. Maybe I'll switch teams here. But this is a short-term play for about 10 days, 10, 15 days, using options, using the bear call spread. That's my trade. I'm sticking to it. Please like and subscribe. Check out my Discord channel. It's under Stock Planner. The link is below. The setup for this chart is below. Happy trading and catch you on the flip. Please look at Kroger. Thank you.